Welcome everyone to Using Guideline Public Company Data. ValueSource has a brand new database featuring Guideline public companies, and I'm here to demonstrate that and put it in context of a valuation. My name is Dave Miles. I'm a CPA. I'm also a CVA, so I know and I've been at ValueSource since 2000, and my job there is to be the domain expert and link up the market space with the programmers who need to make things happen. And that's where I've gotten my experience at. I've talked to a lot of valuators across the country, and as we figure out how they want to accomplish things with the software or outside of the software using the data, that's how I've gained my knowledge. And so when it comes to data like this, I'm one of the experts, I think, in the country because we put it together. We know what's inside of there. And so if you need to get a hold of me, dmiles@valuesource.com, LinkedIn, Dave Miles CPA, or you can give me a call at that phone number there. I need to go through a couple pieces of housekeeping before we get on with today. The first is there is a disclaimer on the information given today. Obviously, you want to vet the information for yourself, and so I will be happy to help you do that. If you're coming across any information that doesn't quite seem right to you, you're the expert. You have to supply the expertise, and hopefully this will help get you knowledgeable so you can do that. If you have questions during today's presentation, feel free to type those into the question panel. I will stop during different points and try to answer questions as we go so that they're all fresh and relevant, and we'll go from there. As I said, handouts are inside of the handout over in your GoToWebinar Navigator pane. You're welcome to download those. You can send me an email and I will be happy to present those. So let's get a quick overview and get started on today's presentation. We're going to talk about the Guideline Public Company Market Method. We're going to talk about the data, and specifically that's what we want to go through today. We want to say here's how you exercise your expertise in pulling out a proxy for a subject company and try to do that. We're going to talk about the tools that we have for exporting this data and how that might make life a little easier. Obviously with Excel spreadsheets, which is where the endpoint is, we're trying to keep things transparent and easy to use. And then we will come through and we will wrap things up at the end of this session about 50 minutes from now. So one of the things that we always like to start with is, why am I looking at this information? Why public company data? And basically, if you are doing a valuation, I think that one of the sources of data you need to look at is public company data. And when you do that, you're complying with the standards, and you also have to look at the methodology. One of the things nice about the public company data is that it's very transparent and it's very, very reliable. One of the issues with this data is that, how do you determine comparability? And we'll get into that a little bit later on here too. But basically, we're going to look at this. We're going to look at it in context of a public company methodology. To do that, you have to have public company data. And we'll get into why I think this data is a little bit better than some of the other data. And we'll talk about where you can go for that. And then, the last thing is that all of this still requires your expertise. As much as data can provide us with proxies and substitutes, you still have to have expertise to make that tie between the data and the subject company. And that's really what we do as valuators, is that we try to make our expertise knowledgeable way of doing this understandable to somebody else. Not only understandable, but as we make those leaps from a private company or from a subject company into public company data, can somebody take those same steps with us, and would they agree that that's reasonable? We like Guideline Public Company because of the transparency. As I said, SEC requires these companies to file reports every quarter, every year, and as they file those reports every year, it's very reliable. They're audited financial statements, and you just don't get any better data than that as far as saying here's what the company is doing on a numerical basis. So The basic guideline public company method says you need to determine a population of similar companies. And so one of the things you have to look at is how do I go through and come up with some similarities? Typically we'll type in an industry code, or we'll use a sector code, and we'll try to say, okay, here's what's going on with this. And the question I have is that even though you look at industry, really, because these are public companies, and a lot of times public companies have multi-line businesses, whereas the businesses that we look at in subject companies might only have 1 or 2 lines of business, and comparing those might be a little difficult. So if you're not comparing that on the industry, and I'll get into this too, I'll show you, I'm not sure I can show you an example, but I have seen inside of this data where a company would be reporting under one SIC code, but they're actually doing business in another code because that was the code that they used to file their ability to trade on the stock exchanges. And so that's the code that they have, and they haven't changed it yet. So anyway, if you can't get into the industry, what else can you do to try to come up with comparability? And you can start to look at markets and geographic coverage. You know, I'm sure we're all familiar with the Shannon Pratt, you know, Hallmark card case, where he didn't use, you know, other greeting card companies. He used something slightly different. You know, the other example that's typically given is McDonald's really a restaurant company, or is McDonald's more of a real estate company? And you can look at the markets and the geographic coverage and some of the products that they sell. Something else that we tend to look at is and somebody's making a suggestion in the comments, how about customers? And that's exactly where I think you need to be looking at, is saying who's buying the product, and are they buying it in a similar fashion? You can also look at growth of the companies. A lot of growth of public companies come not because of organic growth, but because of other reasons. They're basically purchasing other businesses, and the growth in their top line is coming from those purchases, those strategic acquisitions. And so growth you need to look at, but you have to be cognizant of what's going on there. Operation similarity, that's what we talked about with the Hallmark card case. And we can go from there. So just because you have a company that's doing business in a particular industry doesn't necessarily make it right. Another example that I've been given is let's say that you're looking at a tractor, a farm tractor sales, and you want to go out and compare to the guideline companies out there. Well, you might pick up Caterpillar, but if you pick up Caterpillar, are you talking about their diesel engine business? Are you talking about their construction business? Or are you talking about their farm tractor business? And so you can get into some real issues with guideline public companies, and you need to study them out. That's one of the problems that we'll see with the guideline public company method is that as you study these out, it becomes harder and harder to make those leaps from a subject company to a public company. The other issue is that you need to take a look at the financial statements and say, should I normalize these financials when I'm going through and creating my multipliers? And the answer is yes, you need to make those types of adjustments. Now with public companies, it's a little easier. You can pull some of that non-operating stuff out because it's in a different section of the income statement. It's not like you're trying to normalize compensation and do things like that, but you do need to look for the non-operating and the non-recurring issues that are showing up inside of those financial statements. In fact, I'll just say it here, is that while we have some great comparability tools in front of us, and what we're going to look at is that comparability issue, I still would feel uncomfortable as a CPA using just TagniFi data or just this guideline public company data. I would still want to get the financial statements from these public companies and read them through myself. I've spent years in college, spent years in apprenticeship, spent a lot of effort getting a CPA certificate, and all of that says is that I know how to read a set of financial statements, and I would hate to be asked the question, did you read the financial statements for IDXX? And you know, that's the kind of thing that you want to avoid, is make sure that you have all of the information. Let's talk about the multipliers. This data set here is going to provide a market value of invested capital. When you're looking at public companies that leverage, the debt part of this has a huge effect on what's going on inside of the financial statements. And so choosing an equity multiplier tends not to work as well. So we're calculating an MVIC multiple inside of here. And then once you have some of those multiples, what do you do at that point? Some people will go out and do a haircut discount. In other words, hey, here's my multipliers, and I'm just going to take 75% of that and use that because of all of these other reasons: public company versus private company, growth adjustments, size adjustments. Other people like to get more sophisticated. They don't take just a simple gut feel for what those things are, and they'll actually use the Duff and Phelps CRISP data. In other words, here's where this public company resides inside of the decile information. They're in the 5th decile, and this is where their return would be at. Here's where the 25th return at, and we can get some idea of what that ratio to size is, and we can do some adjustments based off of that information. In fact, I recommend that you look at the archived webinars, and I believe if you look up Warren Miller and Guideline Public Companies, he goes through that in detail, and that's where I would go to get those size adjustments based off of basically CRISP data. There's also growth adjustments. How do I handle the differences in growth and look at that? And that's a fundamental adjustment typically made by Chris Mercer. You can look in his books to find what that fundamental growth is. I know inside of the software we have those fundamental growth built in as well. So I'm not going to spend a lot of time on how we go through and build these up. Every Guideline Public Company method is unique to the firm producing the valuation report. There is so much information that you can get out of these financial statements, and it's so reliable that you can do a lot of things with it. How do you determine comparability? We used to have a analysis tool that said, look, let me pick all of the public companies here, and then from those public companies, let me find if I'm within 10 or 20% of the same, say, quick ratio or the same debt ratio or the same other ratio that you might be looking at, gross profit. And based off of those types of parameters, maybe I'm comparable to this company. So there's a lot you can do with the information that's going to come out of here. Now, I used to believe that the Guideline Public Company would be more of a direct substitution. And that is that I have one company, and I can say that my subject company is exactly like that public company, and therefore it should trade the same. As we've gone through some iterations and some different court cases, it's more likely that you're going to have a population of public companies to say, look, here's where the industry is trading at, and so as a result I can put my company inside of the industry here. And when we do that, when we start looking at a population instead of just a direct substitution, we need to talk about the population, and we need to talk about statistics. And so the statistics are, is if I have an arithmetic average, a mean if you will, I have to be wary of the endpoints. Any endpoint that's very high is going to drive my numbers very, very skewed, if you will. Median tries to take that value problem and says, well, let's just look at the number of items in the population and pick the middle one. And so if we array the values from largest to smallest and we pick the middle one, that gives us the middle. And the issue with the median is that, again, it can skew things because it has no idea of what the value is. There may not be any weight on the value part, so you have to be careful with that. The example I like to give is that if we took everybody in the webinar and we said, what's your charitable contribution on your tax return, or what's your charitable contribution every year, and we come up with an arithmetic average, we divide it by the number of people in the webinar and we come up with a number. Then if Warren Buffett and Bill Gates jumped on board, now all of a sudden that arithmetic average is going to get skewed way to the high side. Whereas if we chopped the population in half and used a median, we get a better number. And so you have to be very careful of that. Now the median works the other way, where if you're not looking at the values and you're just looking at the number of items, it can get a little dicey too. So, not necessarily in context of all of these multipliers we'll be looking at, but if you had a lot of very low value items and there was a lot of those, let's say that you were looking at the gross profit, or not the gross profit, let's say you were looking at the incremental profit percentage, here's what the item cost, here's what I sold it for, and that percentage, you might see a lot of items inside of a store that have a very low profit margin, and then all of a sudden there's one or two that have a very large profit margin. And so while you don't have to sell a lot of those one or two, getting that would make sense. And so you have to be careful with the median, because the median would give you a very low number in that case as opposed to a high number. Ranking is where we just take that information and we kind of give it some steroids. And so instead of chopping it at the 50th percentile, the median, let's chop it into 10 pieces, 10, 20, 30, 40, 50, 60, 70, 80, 90, 100. We're looking at crisp data here. A lot of times people will chop things up into quintiles, where it's every 20%. Here's the bottom 20%, the next 20%, the next 20%, and then the top 20%. I think I got 5 of them in there. Some people will use quartiles and say, here's the bottom 25%, here's the top 25%, and the middle part is the inner quartile. Well, that inner quartile is a very interesting statistic. I don't think a lot of evaluators are aware of it, but the inner quartile is that 25th to 75th, 25th to 75th value. And if you're more than like 1.5 times past those values, then you have outliers. You can go out to Wikipedia and look up inner quartile and see what that looks like, but it's a different way of statistically representing a population. It's not as math specific, but it has a lot of value. If half of your population is in this area here and the other half of the population has the outliers in it, it's pretty strong evidence that this middle inner quartile is where you should be at. You can also use statistics, and that's where you come into the standard deviation. One standard deviation comprises 68%, 2 comprises 95% of the population, standard deviation, kurtosis, and all of that stuff, and that gets a little complicated to explain, but a lot of people like to use the standard deviation and the statistics because that helps give them more of a quantitative value pushing forward. In the recent past, and when I say recent past, I mean like the last 10 years, the harmonic mean has become more important, and that's where you take the reciprocal of the mean of the reciprocals. And what it does is it tends to drive you towards the lowest average that you can look at. And the way that typically works is for a ratio. So let's say that you're looking at ships that get nautical miles per barrel of diesel. And back in World War I, I believe it was, they were sending ships over to England with supplies, and they kept running out of fuel before they got there because they were using an arithmetic average and not a harmonic average. But you can look those up and see what some of the advantages or disadvantages are to those. All I do is bring them up saying, hey, if we have 4 or 5 public companies out here, how are you going to describe that population, and how are you going to pull out a number that matches the multiplier that you have? Are you going to use a ranking? Here's the 25th percentile because I'm kind of in the lower half of the population based off of my analysis of the subject company. You're going to use a median and say, hey, here's where most items trend towards. You're going to use a harmonic average and say, look, this here is the most relevant for a ratio. The point being is that you, as the expert, get to describe all of that, but I kind of wanted to go through these statistics because as we describe a population, how you do it becomes important. There we go. So the next thing I want to look at is who can provide Guideline public company data. And we can start at the most expensive stuff, or we can start at the free stuff. So let's talk about Capital IQ. Capital IQ is incredible data, has an ability to drop its information straight away into an Excel spreadsheet. The problem with Capital IQ is that while all of this public information is available and available to download into your templates, it becomes very pricey. You have Bloomberg terminals out there, and I may have those switched around backwards. A Bloomberg terminal might be more expensive than Capital IQ. And if you're lucky enough to have a Bloomberg terminal, I'm not sure that the information I'm giving you today is going to be any value at all. Bloomberg terminals are probably the top of the line out there. You can go down a little bit and look at Hoover's. Now Hoover's does some of the same sorts of stuff that this database does, but Hoover's is running around $3,000 last time I checked for a subscription where you can get Guideline public company data. A lot of people use Hoover's just to pull out the C-suite so that they can use contact information and get some generic information so they can go and try to market to those larger public companies is where they're going. PitchBook put out by BV Resources is about $1,100 a year, maybe $1,050 a year, and it has a lot of the same information that's inside of here as well. There are free sources. The free sources are Morningstar, Yahoo, Google, Egger, you can go straight away to the SEC and pull down these financial statements. And the issue with that is that now all of a sudden we're starting to spend a lot of time. And as we start to spend more and more time, we have to ask ourselves the question is where's that value to the value? Where's the value for the price I'm charging come into play at? And like I said, guideline public company searches are expensive, and they can get out of hand pretty quickly, and so you have to make sure you take a look at those. Again, I would always recommend that you go to the company itself, pull down the financial statements that they've promulgated, and see if that works. Where is the data that we're using coming from? In fact, everybody's data is coming from SEC filings and company disclosures. Like I said, the beautiful part of this is very transparent, very, very reliable, audited financial statements. You have 3 or 4 people putting their names and reputations on the line to make sure that that information is accurate and reliable. So that's the good news. And like I say, make sure you pull down those individual financial statements, read the notes to the financial statements so you have a good idea of what's going on. TagniFi. TagniFi is the data that powers this database. And I guess I should go back and say I gave everybody else's prices out there, And this is available through the subscriptions available on keyvaluedata.com. The lowest price subscription is about $350. To get an unlimited number of downloads, you're probably talking around $1,500, and there is a level of subscription that is above that. So you can go out and take a look at those, but this is only available in the subscription packages. There's no a la carte to the guideline public company data that we're selling today. And TagniFi is the database that powers all of this. And so where I want to come from on this is to talk about how they get the data. So as I understand it, TagniFi has pulled away from its previous source and started to go to the individual statements themselves. So they're looking at the SEC filings, they're pulling out those individual statements for those public companies, and they have an algorithm that pulls the different tags, if you will, and puts it into a comparable, industry comparable template. So there's basically 3 industry templates. I think it's banking and insurance, and operating, and most of the companies we're looking at are in the operating one. But think about it, if you have an interesting balance sheet or an interesting income statement, can you get comparability between those? And if you can't, then they have a template for it. There's 10 years of history available on 6,000 plus companies, and we're gonna go in and see what some of those are. But like I say, one of the greatest things here is that it has this standardized across years ability to provide comparable financial statements. And so you can actually say, oh, here's what this is compared to this, compared to this. Now that in itself lends it to be problematic, and that's why I said you should probably read the financial statements if you're going to use those particular public companies in your population. But I want to make it perfectly clear that if you had to sort through all of the public companies without having this data in place to begin with, it would be very difficult to come up with a comparable set to even start to look at to see if it was part of the comparison you want to include in your population. Well, a couple things I want to say about this data is it goes through hundreds of quality checks before it comes out into the database, and there is 100% transparency with the filing. So when you look at the particular line item inside of the TagniFi data, there is a corresponding SEC filing that has that number, and you should have 100% transparency. And I just gave the data consistency and the comparability. That's what all of this is about, is that they actually are providing that sort of thing. I'm checking the questions here. One of the questions is when is the best circumstance to use Guideline Public Company? Here again, you're the expert. You get to choose that. My personal opinion is that with this type of tool, you should be checking it on most valuations. If you're going to use a market method and you don't check this particular data, I think that you're missing the boat. Now, just because you check the data doesn't mean you have to download anything, but you should at least look at that. And somebody else is commenting here, Bloomberg data is normally standardized or as reported, which one is more reliable for Guideline public company data? I've never had access to a Bloomberg terminal. I've only heard about them, and so I would have to go for that. But the other question is as reported or as corrected is a big question, and then we go back to the known or knowable situation there. So as we get into what is known and knowable, how do we go and take care of that? And we're going to talk about that in a minute, so we will get there. So what I've done here is I've switched over to keyvaluedata.com or bvdata.com. If you own a subscription, you come in through bvdataworld.com or keyvaluedata.com. You get to the same data. It's just a different doorway, a different way of getting to this. The name of the database is called Guideline Public Company, and you'll see the words TagniFi out there. That's the one you want to pull in. Previously, we were using Morningstar fundamental information. Morningstar is a great website if you want to go and see some of these things. We had some difficulty in producing quality financials with that, so we searched for a new data set, and we came up with TagniFi. Now, I need to say a couple of things here. When we look at this TagniFi data, on the website, it's still our 1, 2, and 3. 1, 2, and 3 is how you operate the system. You search it, and then you review it, and then you export it. And while I want to look at the review here to give you a couple ideas, this does not have a ticker symbol inside of it. When this does not have a ticker symbol, and let me draw a big line over here to show you where that's at, that means that that company has information inside of the database, but it's no longer publicly traded. There's not a ticker symbol associated with that. That's good news because as we talked about before, you know, hey, what was known and knowable at the valuation date? That means that if this company was publicly traded at the valuation date, we can get information on it. You'll see some other instances where the SIC code and the NAICS code don't match up to the segment. And what's happening there is that the company is reporting under an SIC code that's different than the business that they're operating in. Happens a lot. And so you have to make sure that you're very cognizant of the fact of what's going on inside of those public companies. And so you have to be careful with those. We have two ways to search the database, a standard way and a detailed way. On the standard way, we're looking for some very simple information. Give me an SIC code or an NAICS code, a simple description, and these are Boolean AND conditions. So give me an SIC code of 3845 and you know, it has the word devices inside of it. And then it would give you this, the intersection of those two sets. You have to have a valuation date. The valuation date, the valuation date is the date that the pricing will come through on the multiplier sheet. And so if you choose December 31st of 2016, you're going to get three prices. You're going to get the low and the close, and we calculate an average with that, so you'll see the average price for that particular day, and that's all based off of the valuation date. The cutoff date is the known or knowable piece, and you as the expert have to decide what it is you want. So typically a public company is going to have December 31st financial statements. They're going to go through a close process, they're going to go through a quality control process, and then they're going to file those statements with the SEC. And it takes a few months to get those reported. That cutoff date is what's going to tell you, was this reported at 12/31/16 or was this reported a little bit later? So let me give you an example here of a pretty standard search. SIC code 2835. I'm not going to put in a description. Valuation date 12/31-2016. And if I put in a cutoff date of 12/31/2016, I'm going to press search, and only that information that was published as of 12/31/2016 is going to come through. And you should be able to tell over here on my, so here's the SIC code, it came through, and now I can start to look at some of these dates over here. So I have a 4/4 of 2016, and I have an 8/10 of 2016. So those are annual financial statements, August of 2016, because nothing had been published after that for the 12/31/2016. If I want to capture information, if I say, hey, this here was knowable at the date, then I have to put in a different amount over here. So if I put in 3-31-2017, that gives me 3 months of time for those financial statements to come through. And the problem with this is that as I start to extend that period, now all of a sudden I'm looking at 3/15 and 3/31 financial statements as opposed to December 31st financial statements. And so you're going to have to play with this number a little bit to get what makes sense as far as a known or knowable date. Whoops. So if I press this about 30 days out and press search, I'm going to start to see more of these December 31st financial statements show up inside of my population. Now that is the standard search. Let's say that I want to go to a detailed search. And a detailed search would allow me to search for the same items. In other words, I can put in SIC, a NAICS code, or a description. And I also have the ability to search for a particular ticker symbol. And so if I put in GE and I press search, I'm going to get everything here with a GE inside of it. And there's 40 records inside of there. Crazy. I should have picked a better ticker symbol. So everything with an F inside of there. So if I type in Apple, AAPL, and press search, I should only get one ticker symbol. So you can get an idea of how to do that. So what happens here is that you're talking to the subject company and they say, look, we're pretty much like John Deere. Well, John Deere may not show up in a search for tractor manufacturers. They may have their SIC codes in some other place. You can put in that ticker symbol, and when you check mark this, it will show up in your selected records. And then when I go back and I search for my regular codes of 2835 and press search, I can then come up with the other ones that I'm looking for. Wait, it's Boolean and, so it's going to say, tell me the one's 2835. Press clear. 2835, press search. Go back to my current records, and these all have 2835 in it, and I can put in and check mark, and now I get 4 selected records. Whatever is selected over here is going to drop down into the exports. That's the point I'm trying to make. So let me clear this search. Let me clear off my drawings here and say we have an ability to filter out as a rough cut this low and high for assets, revenue, market capitalization. So let's say that you were looking for something with revenue less than, say, $60 million. You could do that inside of here and try to keep that into the smaller companies that are being publicly traded. That's what this detailed search is. Depends on how you're looking at. We were looking at the biotech companies. And so if I look at manufacturing and healthcare products, and I come over here to the segment and I type in biotech and I press search, I'm going to get 447 records. Now if I put in my valuation date, 12/31-2016, 31-2017, and I press search, I'm going to come up with some different information. And so you can start to see what's going on inside of here, that there are different dates and different information that you can look. There's 5 sheets on this, and then I can start to go through and tick mark the ones that I want to look at. So let's say I only want 2835 inside of this same industry. Oops. Fat thumb that one. So now I come up with a new population out here. Now I don't know exactly why there's no assets and no revenue for some of these companies, but they're still a market cap. You're going to have to look at the financial statements to see what that is. When you check mark these, they go into the selected population, and you can see what's inside of there. You can only download 20 companies at a time. Unfortunately, that's the limit that we have on this. So 20 companies inside of TagniFi data is what you can push out to either the fundamental sheet or the multiple sheet. And when I click on the word fundamentals here, these 4 companies will come out, and I can select annual data, quarterly data, year-to-date data, or trailing 12 months. And if I select annual, I will get a trailing 12-month number for the last period. So typically, I'm going to choose the word annual on this one here. I can get 4 different types of financial statements. I can get the income statement, the balance sheet, the cash flow, and the ratios. So for IDXX, I can get all 4 of those, or I can choose just to get the income statement if I wanted. And I will show you what that looks like here in a minute. The last selection that we get is I can round this in thousands, or I can put this in US dollars, millions, or billions. And so I can do an automatic rounding that goes on there. When I click on export, it could take up to 2 minutes depending. If I had 20 companies and I'm generating 4 sheets and there are 5 columns of data for each one of those sheets, and I should tell you that, the quarterly data would have 5 quarters inside of it that you could look at. That's a lot of data. That's a lot of fields that are coming inside of here, and it's all lined up so that it's comparable coming across. So it can take up to 2 minutes to get that out. This is what that particular sheet looks like. And so I can click on the income statement here for IDX, and it will take me over there, or I can just use the Excel sheet. And what I want to point out on here is that there is 5 columns of data plus trailing 12 months over here in the last column. And these are set up so that revenue, cost of revenue, cost of non-cash. When I come over to the next, income statement, I get those same classifications: revenue, cost of revenue, non-cash, and then I can see what's going on inside of there and come up to my comparability here. And so I can compare these 2 companies against one another and have fairly similar financial statements, which probably isn't the case if I looked at just the company's financial statements. But what's missing out of here is all the notes to the financial statement and all the things that say, hey, here's what's special about this particular company. And so you have that trade-off that's going on. But as I was trying to get you to see before is that the comparability here and the ability to pull out information very quickly. Here, let me go into a particular SIC code, let me go into a particular description, pull this information out. Now I can start to see if I'm even close to being comparable to a subject company. And if I am, then I can do more work and pull it down. As I scroll down on this, let me erase my drawings. As I scroll down on this, I can get to common size information. And so we actually just go in and build the schedule and put in the formulas and say, okay, hey, if there's a formula here, take the percentage of revenue and come across. When we come over to the ratios, you can tell that there's a lot of different ratios: profitability ratios, gross margin, EBITDA, pre-tax profit margin. And you can see what those tend to look like because we have the information being dropped down below. This is an equation on top because that's the information you want to see, but this data here is what's coming through on the income statements, and so you can see exactly where that information is being pulled from. And it's very transparent, and it's very easy to work through the different pieces of data. Balance sheet data is down below, so you can get those ratios that track between expense or income and the asset that's underlying it. That's the fundamental sheet, and this fundamental sheet can be used to go back into our multiplier sheet. So let me come back to the database, hit cancel, And if I wanted to click on the multiple sheet, it does the same sort of thing, but there's no selections on the multiple sheet. It just says, hey, I'm going to download this and it's going to take me a couple minutes to figure out where it's at. And here's the box that I can get. So I'm just going to hit cancel on this because I already have the sheet down. And let's look at what the multiplier sheet is doing for us. There is a summary sheet, and the summary sheet has some instructions on it. These are hyperlinks over here, so you can go to the particular item. But like I said, you can type in the sales of the company so you can start to compare yourself to that company. Oh, it's going to be smaller than that. And as I start to put in my information, I can also calculate what the multiplier might be. Now, I'm not doing any kind of analysis on this. There's no expertise. I just typed in, here's the median for the last fiscal period, and put it in there. The next sheet over, you can start to see where the subject company, I'm trying to grab my highlighter here, you can see where that subject company information is coming in, and you can kind of compare it to these particular public companies and say, okay, IDDX, you have 1.7, that's a huge number. Do I have an order of magnitude that would make any sense? Whereas this IMMU starts to make some sense in the sales category. It's closer. Maybe I'm getting out there online with this 16, and maybe I don't want to include those in my download. And you can get some comparability going on inside of this schedule so you can see where you fit. And then of course you get all of these different values inside of here. So if you have negatives and you have positives, you can't calculate a harmonic mean, but you can calculate a median automatically, and you can calculate a mean automatically. With only 4 in the population, you probably can't do any statistics on it that has any confidence levels that start to make sense. Breaking it up into rankings or quintiles or interquartiles doesn't make sense either because there's only four variables here. So now you get all of these questions that you have to ask yourself as an expert, how do I want to do things? But the point is that there is data here, and you can see what's going on with it fairly quickly and fairly easy to make a determination, should I continue on with this particular methodology? We do the same thing for the trailing 12. Personal opinion here, probably would use the trailing 12-month numbers more so than the annual figures, but you can make that choice based off of the data that you're seeing for your particular company. This is how we calculate the MVIC multiples. Very transparent and very easy to do this. And what that can do is that can give you a sanity check if you're looking for that. You may have to do a little bit more work if you're trying to do something else. So as I said, 12/31/2016 is my valuation date, so it pulls the pricing for the last business day before that. Low, high, calculates an average, and we're going to default to the closing value. You can choose whichever value you want, but that's what we choose. So on the numerator, what we're looking for is, here's the market value of invested capital. So it's going to take the price, it's going to multiply it by the shares outstanding, and it's going to come up to a equity market value. If there is preferred shares, it's going to pull that in at basically the book value. A lot of times preferred shares and book value is going to be very similar. If you need to do a little more research, you can do that out there, and that's what our Model 2 will do, is it'll allow you to do a little bit more on that. But you need to understand that this model here is coming up with a multiplier that's similar and comparable, and you're going to have to decide how accurate it is for your purposes. We then take the long-term debt and the current portion of long-term debt, add those back on, take out the cash and cash equivalents, and we come up with the market value of invested capital. If I was doing this in a different way, I could say, here's my common stock. Now, blue font cells you can type over the top, and the price of those might be 117.27, and the shares outstanding might be 90884. And then I might have preferred stock, and it might have a value of $150, and there might be, you know, 150,000 shares of those. And so I can get a more accurate equity valuation by looking at that. I'm going to have to type in my own price and my own shares outstanding, and I can look at that back on the fundamentals. I'm not sure I showed you this, but over here on the right-hand side of the sheet is it saying here's where we're getting our information from. So when I say from raw data, same as fundamentals, I can go back to my fundamental sheet, look at IDDX for an income statement, and as I roll myself up, I can say, oh, here's, I guess we were looking at the balance sheet, so let's go and look at the balance sheet. You know, here's where the cash and cash equivalents were, 154,901. When I go back to my multiplier sheet, 154,901 is what's showing up on those cash and cash equivalents. There's transparency here. You can go and you can tie those numbers together. And again, TagniFi has the ability to go out and tie those into the financial statements of the public company itself. So what do we do for the denominator? Well, we pull from the fundamental sheet the same information. So you should be able to tie these two together. So we have sales here, we have EBITDA, we have EBIT, and TagniFi is the one that defined our EBITDA. They said this here is most likely to represent the earnings before interest, tax, depreciation. And then we have tangible book value as of the ending date, and at the end of the day we show you exactly here's the numerator, here's the denominator that was calculated, and it comes up with the multiplier for the last fiscal period. Here it is for the trailing 12 months. By having these multipliers, by having this transparency, and by having this ability, you should be able to go through this process fairly quickly. Now, I'm not going to sit here and say this here is the only piece of the process you need to look at, but it can give you that first iteration of the process and help you get to a comparability issue really quickly and say, look, I don't have comparability here, or I do have comparability here. Oh my goodness, the hours on this valuation just increased dramatically if there is comparability. So I have a couple questions. Is it possible to do Boolean searches that are OR searches? And the answer is no. I haven't seen the ability to do OR searches inside of here, but you can select those, you know, make your selections to go over to the selected tab and then go back and you would have a population that had both of those items in there as the OR. And somebody's asking if she can have a copy of the slides and the sample sheets. The slides are inside of the handouts, and the answer is yes, you can download those. And when I take another look at this, I will be happy to email those to you as well. If you send me an email to dmiles@valuesource.com. And at this point here, I would like to go back to the slide deck and try to wrap some things up here. So let's see. So what are some of the issues? Some of the issues with the GPC method are is it's very hard to get a good population. There's not a lot of companies, and the companies you have are usually orders of magnitude larger than your subject company, and you have to do a little bit of research to make sure that you're in the same comparability faction as far as, you know, who am I selling this to? You know, am I selling the same marketplace, the same geographic region? Am I doing the same lines of business? Am I having the same growth? And that sort of thing. You need to know a lot about the public company itself if you're going to use this method. That's why I said you got to read the financial statements of the company. It's time consuming because once you start reading those financial statements, start normalizing those financial statements, it can get very time consuming and rough. And it's very easy to wrongly apply the data. I think that what happens here is that people want to do this fast and they put a whole bunch of analysis sheets together, they start copying and pasting, and they haven't done the extra research to make sure that that data is really applicable, and so they wrongly apply it. They come up with a multiplier that may not be right. guess what I'm trying to say is that don't subrogate your expertise to the black box here. While I think that this information is very valuable and very useful and goes straight to realization rate, because you can say, look, here's the comparability factors, boom, 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 and you can get a very rough cut idea on whether you have a guideline public company method or not very quickly with this data, and I think that that's what makes it so valuable. TagniFi data is quality data, easy pricing. Like I say, it comes inside of those levels for $350 a year. I think you get 7 downloads. Very easy, very, very nice. And the data gets exported to both Excel for the fundamentals and for the multipliers. I want to thank you for your time. Feel free to reach out to me. I'll be happy to answer any questions I can. I enjoy doing that. If the whole boat rises, then everybody is better off, so I enjoy helping anywhere I can. Feel free to reach out to me. Feel free to connect with me on LinkedIn. I want to thank you for joining me this afternoon.